going. So yes, good afternoon, everyone. So my name is Adrian Brabazon. I'm the head of sales for the BP Fleet team, and we want to warmly welcome you to this BP Fleet and BP Pulse webinar as an introduction to electrification and future landscape. My colleagues will come on video at the appropriate time, but I'd like to introduce them now. Tom Callow, who's the head of Insight and External Affairs for BP Pulse, and Mark Bloxham, who is the Chief Marketing Officer. So before we get into the real content of the webinar, I just wanted to position why this is so important for BP. Many of you will be aware that BP changed their strategy as many big corporates have done in the last 12 to 24 months, and it's a big pivotal change for BP to migrate from an international oil producing energy company producing resources to an integrated energy company delivering solutions for customers. And electrification is really at the heart of this, and BP has some major plans to expand the BP Pulse network infrastructure to 70,000 charging points by 2030. And we've already invested in a couple of big deals that you may have seen in the press. One, for example, with Volkswagen, where we plan to expand jointly the ultra-fast EV charging network across Europe. And recently with BMW and Daimler Mobility, BP's taken a third share in digital charging solutions, where we around software integration for vehicle operating systems. And this is all in service of BP's main aim to become a net zero company by 2050 or sooner. And as I say, electrification plays a critical part in that transition. Now, one of the things I should have mentioned up front, if you do have any questions, please pop them into the Q&A and we will endeavour to respond to those after this short presentation. But with that, I'm going to pass you over to Tom. Thank you, Tom.
Many thanks, Adrian, and good afternoon, everyone. So moving through the market presentation now. Just thought we'd give you a bit of a flavour on where the electric vehicle market in the UK has been and where it's going. So this first chart here shows the tremendous growth we're seeing of electric vehicles in the UK, which I'm sure none of you need to know. Many of you will already have electric vehicles in your own fleets, but we're seeing record registrations, obviously, year in, year out. You see the blue bars obviously representing annual registrations here, and the line going upwards very steeply representing the cumulative electric vehicle park in the UK, which many of you will have seen recently surpassed 500,000 electric cars in the UK. So much faster growth than, for example, hybrid vehicles achieved in the UK, and the fastest growth of any new vehicle technology that we've seen since the advent of diesel cars, several decades ago. So it is certainly the trajectory for passenger cars and vans in the UK in our view, and we're seeing that year-on-year rise. So we'll hit roughly 300,000 registrations by the end of this year. And next year we should hit well over 400,000, meaning that we'll hit 1 million registrations in total some point in the middle of next year. What's really telling, though, if we move on to the next slide, is that there's this rapid transition towards pure electric vehicles. So these are vehicles that are only powered by a battery, can only be charged, you can't fill them with any kind of fuel. And these really are the vehicles that seem to be powering the market at the moment, powering the growth in the market. So on the left here, you see the total electric vehicle registrations in the UK. And for us, an electric vehicle is anything that can be plugged in. So that includes plug-in hybrids. But you see that huge growth, slight growth sort of from 2017 to 2020, and then 2021, real surge of demand. We've just surpassed, as of last month, over 100,000 registrations for the year so far, and that's only the first 5 months of the year. So we're well on track for that 260 or 300,000 figure for the end of the year. Pure electric vehicles in the middle there, you can see, have had this really steep increase over the last couple of years. Plug-in hybrids have been a bit more static. Seen a big growth this year over last year, but actually they're still tailing pure electric vehicles, and which is something that we didn't expect to see until next year at the earliest. It just goes to show the push that there is on pure electric cars at the moment, particularly driven by benefit in kind taxation and other fiscal levers to push fleets to adopt more pure electric vehicles than plug-in hybrids at the moment. There's also increasing vehicle choice, and longer vehicle range as well, which is really helping to drive this market. So most of the mass market vehicles are now capable of 200 miles of range or more. So you're having less and less range anxiety and more confidence in being able to actually adopt them into the fleets with certainty. So moving on to the longer term view, this is kind of the last couple of years, obviously, we see this growth obviously going up very, very steeply, sort of the beginning of the hockey stick curve, as everyone's calling it, ultimately resulting in around about 12 million electric vehicles, electric light duty vehicles. So we're talking about cars and vans here on UK roads by 2030. And estimates will vary. You might hear somebody talking about maybe more like 8 million at the more pessimistic end. There are others that believe it could be close to 15 million or more. But this is our view based on obviously what we know of the vehicle market and our experience in tracking this for the decade or more that BP Pulse has been in existence. What's really telling is the sort of split here between the fleet market and private car market. So sort of dominating this is non-privately owned vehicles. So fleet and business vehicles seem to be dominating the EV mix by 2030, very much being driven by the cost savings, but also the environmental imperatives of fleets transitioning to electric cars. So that's really the story of this chart going up to 12 million. Of course, what that means in 2030, though, we all know there's 30 million or so light duty vehicles in the UK. Yes, there'll be millions and millions of electric cars by 2030, but really importantly, there'll still be many millions of petrol and diesel cars as well. So having that ability to service both types of customer will be really, really important for us moving forward. And it's not just vehicles that are on the rise either. So if we move on to the next slide, you'll see that the public charging infrastructure, the type of infrastructure that everyone's most concerned about. I think people understand home charging infrastructure and how that will be rolled out, but public charging infrastructure and where that's growing, we see again this nice attractive curve going upwards in the right direction to show the growth in public charging points in the UK. So there's now over 40,000 of them in 2021. This is just showing you the annual totals up to 2020. Perhaps most importantly, the growth in the top two parts of the bar charts here. So the dark green and the yellow, if that's the colours that you can see hopefully, that's the 50 kilowatt rapid charging infrastructure, and also the ultra fast charging infrastructure in yellow, the 100 kilowatt plus charging infrastructure, growing quite a lot now. So you go back sort of 10 years till 2011, 2012, there were basically no rapid chargers in the UK, and now we're seeing vast numbers of them, thousands of rapid and ultra fast chargers. But really importantly, goes back to Adrian's point about becoming an integrated energy company, not just a charging company, is that we're looking at the energy they're delivering. So although you can see here rapid ultra fast chargers, this is the whole UK network, are taking up perhaps 20% or so of the number of charging points, we think they're actually delivering the majority of the energy of public charging today. So for our own network in BP Pulse, in 2020, albeit it was an unusual year, we actually saw around 70% of all public charging being done on those rapid and ultra fast chargers, despite the fact that they make up around about 20% of our network, 20-25% of our network. So that just goes to show the utility of that type of charging, and that's really why we're pursuing that strategy of rolling out the faster types of infrastructure. So if we move on a slide, this is just a very quick run through the EV ecosystem, as we call it. So where we see the EV ecosystem is split into four. So we talk about home charging, workplace and depot charging, and then also two forms of public charging, destination, rapid and ultra fast. So if you click once more for me, Adrian, what you see here is the sort of numbers here attached to the share of charging that we see today in these domains. So home charging definitely making up the majority of charging today. This is the energy provided. Workplace, it's certainly there. There's certainly a workplace charging market today, but we're going to see a much more steep ramp up in the coming years. And then the balance of charging being taken up with public charging at the bottom, split roughly, fairly evenly, but the majority we think, as I say, being on rapid and ultra fast charging across the UK network. So we think it's delivering the majority of public charging. By 2030, we think that will increase significantly. So home charging will fall as a result. So public charging will increase, home charging will fall as a share, as more and more people that don't have home chargers adopt electric vehicles. And workplace charging will play an increasingly important role. So 1 in 5 or 20% of all of the charging energy we think could be being deployed through workplace charging points in future. So a really critical part of the ecosystem when it comes to electric vehicle adoption. Just thought it'd be helpful to do a very potted sort of run through the times of EV charging as well, because this is a constraint that a lot of people point to, is the time of electric vehicle charging throughout the day. So what you see at the bottom graph here, the grey graph is the home charging instance that we see on our home charging points we have installed. So this shows you the grey graph, the grey line there shows you when people are plugging into their home charging points. The orange line shows you it's a rough trend line for domestic electricity consumption. And as you can see at the moment, there will be a challenge if everyone's trying to charge at home at the same time with domestic electricity peak. At the moment, that will need to be shifted to the right to get off peak charging. And then the background sort of bar chart you can see appear now is for public charging. And what's interesting is that the peak of public charging during the day is very different to the peak of home charging. So you see public charging peaking around about midday, with home charging peaking more in the evening. So if we can push more charging into the public realm and do more public charging, it will actually decrease the strain on local energy networks for home charging, particularly as we shift more home charging into the off-peak hours as well. So public charging plays a really important role in balancing out the ecosystem. If we move on, the next thing I just wanted to flag was around what we call different speeds for different needs. So when we think about the charging needs, one of the points of difference, obviously with refueling, is the fact that you can charge a car in many different ways than you can refuel it. Refueling is quite a homogeneous experience. Charging is not. Charging is a differentiated experience, and that's a good thing for the grid, and it's a good thing for customers. There might be customers that only want to charge slowly, for example, overnight, and there'll be others that need very fast charging almost all of the time. So operational vehicles, taxis, private hire vans, etc., that need much faster charging more frequently than a consumer. So having that choice is really important. And you can see here that with our ultra fast chargers that we're rolling out later this year, so we'll be bringing the first 300 kilowatt chargers on our network later in 2021, you can start to see that those speeds really do equate to a kind of a forecourt fill up time that people are familiar with today. So 7 minutes is about the average dwell time on a forecourt for an ICE today, petrol diesel car. So in 7 minutes on a 300 kilowatt charger, you could be looking at 140, 150 miles of range. That's a really significant amount of range in a standard forecourt fill time. And a few years ago, you were looking at sort of, single digit number of miles added in that period of time. So we really have pushed the market forward. The industry's moving at pace now. So you can be sure that those fast types of charging will deliver what you need as a fleet. Just going back, as much as anything else, it's worth listening to sort of looking at the history of this as well and how things have evolved. So if we can just go forward one, where we've seen sort of public charging insights in the past sort of year or so, just a couple of things I'll pull out here. I won't go through all of these points, but these are just insights from our network and what we see. We're always happy to share these with customers. We're always happy to share them with government and so on as well. As I said, DC charging, so rapid ultra fast charging, accounting for about 70% of all charging on our network. We're seeing obviously the faster chargers delivering more energy, which is exactly the point. We want those fast chargers to be delivering more energy per session than slower chargers, and that helps the economics, it helps the rollout pace. And then obviously in terms of the average charging time, we're seeing that fall as well. So we've got an average charging time on our ultra fast chargers of around about half an hour now, which is lower than our 50 kilowatt chargers, and we expect that to continue to fall as cars come to market that are capable of charging at faster speeds. So at the moment, the time limitation is really vehicle driven. If you turn up to a 150 kilowatt charger with a 50 kilowatt capable car, you can still charge on that charger, but you'll be limited by the car's acceptance of speed. As vehicles evolve and we get to 150, 200 kilowatt capable vehicles, those charging times will drop, and you'll start to see average charging times probably closer to say 15 minutes than 35 minutes. So if we move on to home charging insights, we just thought we'd share a couple of points around how we see home charging being used today. Average charging session much lower, but equates to about the standard sort of driven distance in the UK. So 10 kilowatt hours of charge would give you about 30, 40 miles of range. And we know that the average daily mileage in the UK is about 25, 30 miles. So that adds up in terms of the average requirement per day. And the home charging energy per year at the moment, the average consumed for an EV driver is about half of your overall domestic energy consumption. So the average home today uses about 3,000 kilowatt hours of energy, of electricity, I should say. So having an EV might add 50% to that in terms of the overall demand. So it's important to sort of bear these things in mind if you're obviously asking company car drivers, for example, to electrify, and they'll be doing a significant amount of charging at home. It could obviously have a significant impact on the home energy bill, and just thinking about how that's reimbursed obviously is important. When it comes to grid demand, though, one of the points we've always said to National Grid and others is there's a really good level of diversity already. So the scare stories you hear about everyone plugging at the same time simply doesn't happen at the moment. Only about 1 in 10 home charge units are used daily at the moment, and that will actually increase. That number will actually get wider as electric cars have longer ranges, etc. So you'll start to see maybe only 1 in 20 home charge units used every day, for example, as people start to adopt 200, 300 mile range electric cars. So just moving on, and we'll skip through these pretty quickly, but 10 years ago or more, this is kind of what public charging used to look like. It was a 3-pin plug at the side of the road. And if you go to the next slide, you see again, you've got a 3-pin plug going into a post, and you're really getting about 100 miles of range in about 10 hours. You can now get 100 miles of range in close to 10 minutes. So the industry has moved on in an incredibly fast way in just a decade. We're seeing 50 kilowatt rapid charging hubs like this springing up. This is one in Milton Keynes that we have just off the M1. And also we've got ultra fast chargers on BP forecourts, as you can see in the next image here. And obviously they're perfect for a quick coffee stop, again, charging in sort of 10-15 minutes. We've moved on from closed off publicly funded networks. So all these stories about having a wallet full of RFID cards or needing to have loads of memberships, it was really a story of a decade ago in terms of needing all of these different regional memberships. And we've now got a privately funded rollout happening across the country of mostly sort of pay-as-you-go, contactless rapid chargers, etc., that are much more accepting of consumers using them on an ad hoc basis. In terms of our own network, BP Pulse network, it's still the UK's largest public charging network overall. We focus more on the fact that it's the most used public charging network, because that signals to us that we're doing the right thing. We've got the right mix right there. Over 16 gigawatt hours, so that's 16 million kilowatt hours of energy we delivered last year. Again, quite a strange year for everyone in 2020, but we expect that to be well over 20 gigawatt hours this year. We've already gone past 10 gigawatt hours in the first 5 months of this year alone. And we're rolling out sort of easy to use, friendly infrastructure, so contactless enabled chargers, the most ultra fast chargers of any network, and we're expanding that to several hundred by the end of the year. And we also ensure that electricity used on our network is certified as 100% renewable, because again, that's a really important point of difference when you're driving electric cars. Is you want to know you're not just having zero tailpipe emissions, but you're having the cleanest energy use overall by ensuring that the electricity is actually renewably sourced, rather than necessarily go from the standard grid mix. So just one final point before we close off really, is around utilisation. And this is really important because it sort of counters this argument about the number of charging points we'll need overall. So you hear we get all about hundreds of thousands of charge points being needed by 2030, or millions of charge points being needed, but it's really important that we think about what type of chargers we actually need and what those numbers translate to. So as an example, the ultra fast charger on the left here, it's on our network. We've got one of these at BP Hammersmith, flagship retail site in London, that's done over 700 kilowatt hours in a day before of energy. So that's 700 kilowatt hours, that's 7 Teslas full of energy. It doesn't sound like much if you think of it in number of cars, but it's quite a lot of energy in one day. And we think that to get that amount of energy in a day on sort of on-street charging infrastructure, the kind of thing you see in lamppost sockets, for example, you'd probably need about 100 of those on the right-hand side. So, one charge point could actually, in terms of utilization and utilization and utility per day, could equate to 100 of a different type of charge point. So it's really important that we think about what type of infrastructure we mean when we talk about what's needed in 2030. And finally, as I'm handing over to Mark Bloxham, just a flavour of what's next. So this is an ultra fast charging hub we'll be developing in the UK alongside the motorway network, one of several that will be, one of many I should say, that we'll be developing. I'll let Mark talk to you a little bit more about that, but this just gives you a flavour of the future and what to expect from BP Pulse in the next few years. Thank you very much.
Thanks, Tom. Perfect. I guess sorry, I should say good afternoon to start with. Glad to be here. Glad to talk to you all about some of the interesting facts. And Tom is a fantastic power of knowledge on this industry. Has worked in it for a long time. So, really interesting to hear and listen to. I think where I focus from a growth and a marketing point of view is how do we actually put this into place? How does this help you guys as fleet managers or fleet operators absolutely translate this information and this sort of rush of speed to market? How do we translate that into reality, and how can we help you do that? A lot of the stuff we talk about at the moment is BP as an energy company, and actually the enablement of that allows us to look at both the electrification and fuel at the moment. So we're able to very much tie together our historics in the fuel provision to fleet services, but also really balance that out with how do we translate that, or how do we slowly migrate fuel to that energy provision. And it's a longer term burn. We talk at the goodbye fuel mindset, hello energy mindset. So the combination of the two areas sort of coming together. And really the foundation of that is sort of understanding the interdependence of the key infrastructure. What key infrastructure is out there? How can we use that, and how can we use it in this transitional period? We talk about empowerment to yourselves as opposed to disruption. I think a lot of people like in the EV industry as a very quick moving industry to talk about sort of disruptors and disruption. Actually, when we're talking about fleet service, it's not about disruption, it's about continuation and transition, and giving you consolidated controls and management through that process, rather than sort of saying out with the old, in with the new, because that's not the process. And I think also to give some clarity around it, you know, Tom gives a great insight into how that industry's moved so quickly. One of the questions I always pose to Tom is how quickly is it moving now? You know, from 10 years to today, you know, nascent, it's speeding up. It's not slowing down any time now. So I think it's actually just moving that forward. And I think one of the things we really recognise is in fleet services and logistics services is one size doesn't fit all. There is no silver bullet, sadly to say, in the fleet services. Every individual fleet manager I've spoken to or fleet services company I've spoken to, there is a different style of composition of the fuel and fleet to manage the process properly. So if I can just snip to the next slide. Where are we at the moment? This is my terrible drawing of a seesaw. It's kind of this fleet transition between fuel and electrification. Obviously, our BP's existing customer base is predominantly fuel. We have some early adopters and some people transitioning to electrification straight away. But I think on the whole, when you're talking about large scale fleets, we are talking about this seesaw where at the moment our existing customer base is fuel reliant. If we look at a fleet vehicle of 3 to 5 year lifespan, you know, we've got one, maybe a second process of purchasing ICE vehicles, petrol diesel vehicles, but then we really are into that transitional period of to electrification. So on the bottom end of the seesaw, you know, we're working with companies that are looking for that opportunity, have done some case study tests and trials. There's some very forward-thinking people out there that already sort of done some real-world electrification strategies. But realistically, it's a case of testing, trialing what we can do. But, you know, as I say to people, it's not your next fleet, but your next fleet will potentially be all electric. So we have to make provision for that change because there is an infrastructure change within that process. If I can go one more. Of course, any infrastructure change pours fear into accountants' minds. Your chief finance officer will be sweating slightly when we think about a wholesale investment and a wholesale infrastructure change, and that shouldn't be the case. You know, I think it is a fundamental change to the way we run our fleets and transition through. But I think what you've got to think of is hopefully the end reliance should be slightly lower running cost on a regular basis. If we do a like for like now post transition, we should hopefully be looking at slightly lower continued running costs. So there is an offset, but of course that lump of investment comes with the infrastructure, not just vehicles, but obviously, you know, if you're looking at depot charging or on the go charging, we've obviously got to make provision for that. So the ambition, you know, all our ambitions, I'm sure every person on the call has, they'll have a carbon ambition within their organisation. I think there's a business and infrastructure investment understanding that that's coming. So you know, we look to ensure that the hardware will depreciate at a slower rate, so the investment's worth a longer term investment. But also it's how else can we help you and support you offsetting that lump of investment. You know, the further we push that curve back, either we've peaked through the investment and we pushed it back quicker, or we shallow out the investment and we do a longer term process. But things that we work with, you know, less hardware. There's obviously with onset of electrification comes a huge amount of digital knowledge and digital support when it comes to hardware of the infrastructure. Mixed network use, we don't have to rely on you 100% actually being able to fuel all your vehicles. You know, we have that network offering, and I'll talk about that in a minute. Speed of business transition is the one I mentioned. Do we take the peak of investment and try and push back against the curve, or do we take a longer, slower approach? Is down to the organisation. And then obviously power provision, and that including sort of battery provision, solar provision. We talk about vehicle to grid a lot in fleet services. In fact, there was an article I was reading yesterday in one of the papers that talks about, you know, fleet companies being able to give sort of 7 to 8% of their energy back to the grid and actually sell it onwards to reflect their investment. I don't suggest we're there today, but I would suggest, because obviously the transition of the fleet, but I would suggest that's a very optimal approach to it. Looking at grid services and again, looking at energy provision. I know there's a question in the chat that we'll come to, but looking at the actual energy provision to try and push down on those costs. So there are ways we continually look at, even before we start implementing or start looking at sort of full transitional costs, of how to reduce that longer term effects of those investments. So how do we get you there? gladly, with a name like BP next to us, we're allowed in quite a few doors, and Google and Microsoft often invite us in to have a little chat with what those guys are doing. So there's this isn't the perfect. There's a methodical approach to how we look at it, how we look at that transition. Now, I think on a previous slide we said electrification transition of a complete fleet. A complete fleet may take 5, 10, 15, 20 years. Now, unless you're sort of running out at 2029 and buying a completely brand new fleet of ICE vehicles, there's going to be a slow transition. So fuel is going to last for a much longer time than I think is predicted at the moment. But also, how do we go through that assessment process of understanding what can be electrified in the simplest process first? This diagram is a bit of a working diagram, working with Google, Microsoft Power BI and Google Cloud. What we like to do is take a full fleet, and do an assessment on it. We look at their existing fuel requirement and look at the routing processes that any fleet goes through. And then the low-hanging fruit stuff. Company vehicles are some of the low-hanging fruit. Tom mentioned workplace charging. Workplace plus home charging gives you a great combination of a company sort of business-based or office-based fleet. So there's a certain volume you can convert to electrification quite quickly and incentivize that process. When we actually come to the sort of service fleet or the working fleet, it's really about that route optimization. Now, again, most organizations with any logistics capability or any delivery capability will have some form of optimized route logistics or optimized sort of EV routing, or vehicle routing. What we tend to do with that is we take that history. We take that history and we work with Google to actually translate what's the difference between a fuel route and an EV route. What's the difference in mileage? What's the difference in opportunity charging? This charging on the go, and how can we manage that? So a lot of the discussions I've had with a recent fleet was about a single optimized route of about 185 miles that obviously a decent vehicle can do in one charge. So it was a very simple solution. It can either be charged at home as an overnight fleet service, or it can be charged within a depot overnight. So therefore allowed us to take a large percentage of those single optimized charging routes and do it from depot. The complications of a network lead into the sort of secondary stage where you've got multiple routes that can't quite cope with just a single charge. So again, we optimize that route. We understand where, if I'm leaving with a full charge, if I can depart either a depot or home with a full charge, how far within my optimized route can I do? And therefore, where are the optimized points I can recharge for how long? So we can actually put an estimate in against a vehicle type of how long you would have to loiter for that charge and how long it's till you can complete your round or your route. So that really brings in depot, home, and then the public network or the charging network that we've got. And then the last part of that, really, the last percentage you'll have left in a sort of fleet assessment is really that multiple distance or the variable routes, the routes that where we're talking about service vehicles that are being called out, or service vehicles that we're actually sort of doing unpredictable journeys. And this is that real combination of hubs, networks, depots. This is the sort of the last bastion of the charging fleet would be actually assessed and trying to understand which is going to be the most popular. Can we put hubs in the right area? Can we put network points in the right area, or can we give you access to the the generic public network that will actually fit that? So we work with, as I say, Microsoft, Google to do some of this work. I think as I say, one size doesn't fit all. If you go through sort of number 3 stage and you optimize your sort of single route vehicle, when you get between 3 and 4 stage, there's a choice. You can either look for a vehicle with a larger battery, with a larger range, or you can look for a public network charging. So there are some variables through this process, but at least it gives people a genuinely 1-point start. We can do a decent assessment, really understand the needs of the fleet, and then start to make allocation and provision. That allows, we hope, and we've tested, that people can start budgeting and start looking at infrastructure requirements. And then at least it starts tying together that roadmap of how we can get from, zero infrastructure to 100% over a period of time. So I hope that gives you an idea of what that looks like. And the last slide for me really is just talking about what we're building at the moment to really feature that. And again, I think if you look at the charts that Tom went through, if you look at the onset of fleet vehicles through the hockey stick, as we talk about it, You can see that fleet is a major important part to our infrastructure build up as we go. So I think what's interesting is what we're building today and what we are in situ building and what we continue to build is this sort of 5 areas of main charging. Home charge, obviously, business or personal use, distribution centres or depot charging is going to be paramount and key. Our network we continue to build. We build our network in an array of methods, whether that's sort of forecourt charging, whether that's destination charging at optimised destinations. But there's a number of things we will continue to put rapid and high-speed charging in. And then the 2 realistically new areas that we are developing more and investing more in, consumer hubs. The image that Tom showed earlier on, or the last slide of the presentation, was really a consumer charging hub. Now, a consumer charging hub, we're looking at sort of 24 to 25 high-speed charging networks close to a motorway network. So it becomes, you know, a vital point for network, but it also is in a commercial domestic area where people will be able to come and charge. And the last piece, really, a project that we've been working on hard and we're implementing at the moment, is the business hubs. So we have B2B access. So for business services only, we are creating city centre and key milestone areas, things like Gatwick Heathrow, London City Centre, Birmingham City Centre, are the other ones coming up, are dedicated business hubs. So access to business hub charging, and this is again rapid or high speed charging in city centre locations. The one we've just opened is Q Park and London on Park Lane. So an underground car park there where we have a range of about 10 rapid chargers that is business access only, so non-consumer facing. So again, making provision for that total infrastructure requirement, not just consumer, but really focusing on the fleet. I hope that explains our approach. This is how we try and approach this. I would say, as a sort of last few things, there's a huge amount of noise about EV. There's a huge amount of consultancy about EV at the moment, and I think there's a question for me around the fact that, you know, the joy that we have is we have the history, we have the 10-11-year history of understanding EV, and we are very, very close to the other networks and the government working through this. So we're in a great position to be able to sort of build this network out. As Adrian mentioned right at the very start, you know, our objectives and the speed to market is extremely fast, and we're moving alongside that. And again, you know, the opportunity is to move alongside with us and let us help you with that transitional process. And with that, I think handing back to Adrian.
Fabulous. Thank you both, Mark and Tom, for those great insights. And just a reminder, I know we've had a few questions come through, but please keep them coming, and our experts will attempt to answer your questions. Just to flag here, you've heard some of the market developments and BP Pulse's own developments. This is just an offer. We fully appreciate that you are in different stages of the transition process to electrification, be that at, you know, the very early thoughts or be that more progressed. But what we have as an offer for you today is to work with you and to help you build your electrification strategy, which includes here, as you can see, a free of charge feasibility study. So included within this would be a consultation with one of our BP Pulse experts, optimized site surveys, and importantly tailored solution, because I think, as both Tom and Mark alluded to, there is not a one size fits all approach here. And then also to help you with your transition, we have a number of tools, from an implementation plan, from a traditional fuel card perspective. We have our fuel and charge cards, which can be used clearly for your mixed fleets, be they ICE or be they EV, and then helping you map the total cost of ownership, and then looking not just at obviously the short-term solutions here, but very importantly looking out 3 to 9 years, being, you know, BP very much focused on multiple areas of the energy transition. Many of you on the call have mixed fleets, trucks, etc. So very much around hydrogen, LNG, as well as electrification are the areas that we're focused on to help you. So with that, I'm going to pass over to Alex Potts. Alex is our head of commercial for BP Pulse, and Alex is going to facilitate the Q&As. But again, please keep the questions coming. You'll see the contact points there at the bottom of the slide, either your BP Fleet Account Manager, John McPhail, who's the BP Pulse Commercial Sales Manager as well. But clearly you can contact any of us who presented today as well. But over to you, Alex.
Alex, unmute.
Apologies all, managed to get myself on mute there. Thank you everybody for attending today. I am now going to jump into some of the questions that have been raised throughout the session. If there are more, then please feel free to drop them into the chat. Usually questions generate more questions, but we will start with what we've got. Now, I think, Tom, I'll read this question out, but I think this is going to be one for yourself. And that is, how green is the electricity produced for the BP Pulse network? Also, with 30 billion generated annually in fuel duty and VAT, how do you see the government recouping the substantial revenue stream? And do you think this will impact electric prices? So, Tom, over to you on that one.
Thanks, Alex. So yeah, on the first question, as I mentioned, we make sure that all of the electricity used on the network, so all of those 16 million kilowatt hours that we used last year on the BP Pulse network, are certified as 100% renewable, effectively in the renewable supply chain. So that's a process through something called Renewable Energy Guarantee of Origin certificates, REGOs, very common procedure, very sort of well respected and known procedure for certifying energy. Effectively, at the moment, some of the connections we have are direct connections, so some of the charge points we have are on supplies that we control, some of them are on supplies that another party might control, for example, a hotel, for example. So that means we can aggregate all of that up and ensure that all of the energy used is certified in that way. But going forward, I mean, if you look at what BP is doing, and it goes back to Adrian's point about being, an integrated energy company in future, you've seen announcements this year alone about things like 3 gigawatts of offshore wind power renewables that BP is developing in the Irish Sea. You saw an announcement probably a couple of days ago about BP developing 9 gigawatts of solar in the US. So there's this absolute sort of step up in renewable energy generation as well within the BP family. So actually, although we're using that process today of certification, you can absolutely see a pathway that some of this renewable supply will actually go direct into the network in future. So that's the energy question. On fuel duty, VAT, obviously quite a dicey subject, and there is no sort of firm position on this because we're not advising the Treasury. But I suppose one thing I would pull out is, if you like, unlikely scenarios. So one of that is that if you think about electricity costs that you pay today for your car, if you're charging it, let's assume that it's just general electricity costs in the UK. The average domestic tariff is about 19 pence a kilowatt hour. If you think that there's going to be added taxation on that amount, on sort of the just generic electricity prices, so if you think there's going to be added taxation there, that will have a huge impact on on anyone using electricity, right? It will have a huge impact on hospitals, on schools, and potentially lead to fuel poverty. So it's probably unlikely that you'd see a general taxation on electricity, full stop. If you then say, okay, well what about a scenario where you tax EV charging somehow only, a bit like having kind of red diesel and non-red diesel, etc. Because I can plug my electric car into any 3-pin socket, I don't have to use an EV charging point. It's the safest way to do it, but I don't have to do that. There's obviously easy ways around that. So again, it's quite unlikely that you'd sort of go after EV charging from a taxation point of view, because it'd be actually very difficult to do that. And again, if you then say, well, what about we just target public charging, because public charging is an easier subset to tackle? Well, again, if you think back at the graph I showed on time of use, public charging plays a really important role in grid balancing. So actually, if you then discourage public charging by increasing tax base on public charging, actually all you'll do is push more people to charge at home overnight, when we know that's going to be the biggest area of constraint. So we're not suggesting how exactly that the future will happen and how the fuel duty kind of rebalancing will happen. It's not our place to do that. But where I think it's not going to go is those three things, because there are various reasons why it wouldn't make sense. So various people have sort of postulated about some sort of mileage-based pricing. There's been quite a lot of academic research in this space by people at the AA. So I think it's very unlikely to be electricity.
Brilliant, thanks Tom. Very comprehensive answer there. I'll move on as there are a few extra questions coming through. The next question is kind of a follow-on from there. The question raised is, adding to the previous, how do they, so the government, expect to provide the infrastructure to sustain this growth when, for example, you cannot put more than 16 chargers on one network without disruption and possible need for upgrade to the system? And that's a challenge that faces everybody, is the amount of available power and the cost to upgrade that level of power in order to put the charge points that you want onto what is your network, whether that's your depot or, you know, in case of individual users, your home, or if you are using an on-the-go network, to support all of those new consumer hubs and private charging hubs that we need in order to transition all of the UK. And it's not something that I think we have the answer to in totality at the moment. There's a lot of work required from a group of operators called the Distribution Network Operators. So some example of these are Western Power, UKPN, and these are the people that will actually take power that's running around underneath all of our streets and roads and bring it into a locality, usually a depot to support some more chargers, but it takes quite a lot of time. One of the things that we can offer as part of that feasibility study that we talked about is understanding the fleet and exactly what you need from it, but marrying that up with the cost of installing that infrastructure. And that infrastructure isn't just putting the charge points in the ground, it's the potential cost of bringing in more supply at a certain site. And once you've got that information, what you can start to do is roadmap where you can install best possible value. So we can say that actually you do better to install at site B first because you have sufficient headroom and power supply. Site A second, because we can actually bring power supply in for significantly cheaper than site C. But that's the kind of value and figures that we can pull out as part of those feasibility studies. And so I hope that answers the question. And if it doesn't, then please feel free to drop another question into the chat. But I will move on to the next one, which is it's regarding battery degradation, and I will hand over to Mark for this one. So just to frame it. Oh, do you want me to read that out, Mark? Are you okay?
Yeah, no, I mean, I think, yeah, I think if people can't see, everyone seems to be pushing for the fast charger, but from what I understand, it increases the speed of degradation of the battery.
Exactly.
This is not offset. Battery degradation is an interesting subject that we work with the OEMs on. So our manufacturers, the car manufacturers, are obviously working alongside us and ourselves, but it is really a manufacturing issue that we need to resolve. There's no great evidence to date. You know, there's no sustainable evidence to date that it actually is starting to create that. But I think if you know, if we take a simple example like an old mobile phone, you know, and they used to start actually getting to degradation after you'd overcharge. Again, that's the technology of the battery rather than anything else. And the degradation comes from the heating up process. So you heat up a battery to charge it, it gets to full heat, charges optimal, and then cools down as it slows down. If you look at the more modern batteries or some of the latter point EVs that are coming out, they are starting to manage this a lot better. Ranges are bigger. Battery technology is much improved. So we work alongside the OEMs to ensure that we are, you know, working in line with what they can do, with what the batteries can take and the battery technology. So sadly, I can't give a definitive answer, but I think, you know, we are this year just about to implement the largest testing site in Europe for chargers. So in Linford, Wynnum Milton Keynes, we are building a charging testing site that we're inviting all the OEMs to come and test their cars and actually test their batteries from our site. So, you know, trying to work really hand in hand with those guys to ensure that we are getting optimum charging, optimum speeds. Does that help, Alex?
Yeah, that's fantastic. Thank you very much, Mark. I will jump on to the next question, which is, I think this is probably one for you, Tom. Do all EV cars have the same plug type so that you can charge at any network?
Yeah, so all new electric cars in the market today for sort of slower charging have what's called a Type 2 connector, which is, I mean, I liken that to basically being the USB of EV charging. But even if you don't have that on an older car, for example, it's no different to having, let's say, a Samsung Galaxy phone or an iPhone. You can still charge off the same 3-pin plug or the same USB socket. You just have a different thing on the other end for your car. So yeah, it's charging in terms of the hardware side is fairly universal, particularly for slow charging. On faster charging, on rapid and ultra fast chargers, the European standard now is what's called CCS, stands for Combined Charging System. It's a sort of a connector that has two big pins at the bottom of it. Now that is on some charging networks, that's the only connector being deployed. So if you have a car that charges on a non-CCS connector for fast charging, such as the Nissan Leaf, then you won't be able to use those chargers. But we are currently deploying both CHAdeMO, which the Nissan Leaf uses, and CCS on both our rapid and ultra fast chargers for now. We may in future roll out CCS only chargers once the market moves in that sort of direction in a bigger way. But at the moment we support all standards.
Brilliant, thanks Tom. And I think the next one's probably a good fit, Mark, for yourself.
Yeah, happy to take. So plan for charging centres in more rural areas, away from the motorway network. Absolutely. So I head up the expansion team in the UK that actually looks at the infrastructure, the total infrastructure of the UK. Motorway is key to us from a fleet point of view. Absolutely, motorway services, just off motorway we call it, to be able to facilitate that charging. But to speak bluntly, in the UK with the infrastructure in its infancy, throw a dart at a UK map, you could put charging down. So we have a certain criteria, and we're obviously looking for that volume to start with, because obviously, for investment, we have to get some form of return in utilisation. And obviously the highest utilised areas are rarely the rural areas. However, that said, we look at a great deal of opportunities at the moment, and where we're getting some really nice, slightly more rural destinations is hotels. Where we've got deals with a few of the sort of national parks and things like that. So it's allowing us to walk into those areas and put charging down. This is from an investment point of view I'm talking about here, obviously, where you've got independent and private companies that are actually looking to invest their own finances into charging infrastructure. You'll see that growing. But I think from a BP point of view, to a certain extent, we have to look at sort of core, large key areas that are covering, fleet and volume of traffic. But gladly and hopefully that's starting to spread further apart. And where we look at sort of city structures now, to give you a quick insight into one of the things we're launching at this year, is where we look at Birmingham, for example. We've got a couple of very big sort of out of centre town large charging areas that feeds both rural community and B2B, but also central hubs. So we're actually doing a sort of a strategy around the city that actually allows people not within city centres and not within urban areas to actually fully charge, and obviously people as they travel into the city centre to actually replenish or opportunity charge as they go. So hopefully it'll get better as we expand the network, but of course we've got to go where the EVs are right now.
Brilliant, thanks Mark. Next question is going back for some clarification on the work DNOs are doing. So just to read the question, you mentioned DNOs need to do a lot of work. Are they doing that work now, and what is the timeline on that? And Tom, if it's okay, I'm going to send that one over to yourself.
Sure, thanks Alex. So the distribution networks are starting to work now. We're currently in the distribution networks are regulated monopolies. So they have effectively sort of spending rounds, as it were. So they have price caps and spending rounds, so they can invest in these certain periods to meet the needs. The current period ends in 2023, so there'll be sort of 2 years probably, or a year and a half now of probably quite intensive investment. And some of you may have seen an announcement from Ofgem a couple of weeks ago regarding £300 million of funding that's going into grid reinforcement, grid upgrades across the country, not just for EV charging, but the vast majority was actually going to EV charging. The majority of it within that was actually going towards motorways as well. And the DNOs are starting that work now. So in some areas it will happen quite quickly. Happening within a matter of months, and some it might be more like a year or two, but that work is going on now. And it's also important to note that obviously the distribution networks are preparing the electricity networks for other wider applications for greater electricity demand, such as things like electrification of heat. So it's important to note that it's not just EVs that are sort of pushing this door, it's other things as well that are applying the pressure to the DNOs to carry out this work.
Brilliant, thanks, Tom. And I think, Tom, if it's okay with you, I'm going to fire the next question to you as well. I think you're probably best placed for this one as well. With HGV manufacturers also looking at hybrid and EV solutions to their vehicle ranges, how do you foresee the change in forecourts to change from fossil to EV whilst coping with the vehicle size and time to charge?
Yeah, it's a great question. I think that the answer is obviously there will be solutions. I mean, the great thing obviously from a BP perspective and being part of BP is that you know, BP has a huge amount of experience in this space of catering for all types of vehicles. I think what is likely is that you'll see some sites where there is sort of a blended use case. I mean, I know I drove past my local forecourt and was quite surprised to see 2 big 7.5 tonners on it, which is a pretty uncommon sight, you know, kind of weaving their way through the lanes, probably blocking it for some of the cars. But actually, if you go to, say, the motorway services, you tend to find obviously the separate HGV lanes for them to actually fill up. And I think in similar vein, you'll probably see the emergence of infrastructure where there'll be sort of dedicated infrastructure for things like coaches, buses and HGVs, dedicated bays or dedicated areas that are sort of slightly away from the passenger car area, and other bays that are smaller and designed for the cars. Because obviously, if you just have the car infrastructure being used by larger vehicles, you probably have several bays being occupied and blocking some infrastructure. So I think, you know, you'll certainly see it evolve, but it's going to be market led and market driven. At the moment, the reason why you don't see an abundance of HGV charging infrastructure out there is very simply that there isn't an abundance of HGVs to power. And you won't see the sort of infrastructure being laid out that far ahead of demand.
Brilliant, thanks, Tom. Adrian, was there anything that you wanted to add to that on the fuel side?
Yeah, it was probably a build on what Tom has said. I mean, our insights from the customers we're talking to and also the manufacturers from an HGV perspective is the majority are looking at the LNG stroke hydrogen solution, and you know, again, different companies are taking different approaches. What I see with from an infrastructure perspective is you can imagine to have an LNG network on existing forecourts, for example, is quite difficult because they need space and there's very specialist equipment. So one of the things that we're doing for sure is looking at partnering, and I think partnering is going to be increasingly important across the whole energy transition going forward. So again, we'll have some news from a BP perspective within the UK around some of those alternative energies for HGV as well coming up soon.
Brilliant. And it looks like we've got final question in here. How many current EVs can charge at 300 kilowatt? And I'm going to fire us back to Tom for this one.
So really easy answer to this one in terms of the number of EVs on the market that can charge at 300 kilowatt, and the answer is 0. So I mean, really 2 really key points here, that we're deploying 300 kilowatt chargers to ensure that we're future proofing, because we see the technology moving in this general direction. But there are no vehicles on the market today that can charge that fast, you know, in the production market. But what we see is an increasing number of vehicles with this level of charging, and by that I mean, you know, between sort of 200 and 300 kilowatt speeds coming to market, and not just in the luxury segment. A few years ago, if you'd asked a lot of people in EV charging, you know, what vehicles in future are going to be charging at 250 to 300 kilowatts, most people I think probably would have said, we're only talking maybe 3-4 years ago, most people might have said, well, probably only really high-end exotic, you know, luxury cars. But what we're seeing now is that the charging speeds that you can get there, and the battery technology that you need to get those charging speeds, and this is where 800-volt battery architecture comes in, which also improves things like degradation or reduces degradation issues, is now being applied to mass market vehicles. And by that I mean the latest models from Kia and Hyundai, for example, that are arriving not in 5 years' time, they're arriving this year. So the EV6 from Kia, the Ioniq 5 from Hyundai, those vehicles will be able to charge at over 200 kilowatts and have been shown to some pretty you know, brilliant speeds in terms of the amount of range you're going to get in as say 5-10 minutes. So we're rolling it out to be future proof, but you'll see a surprising number of vehicles in that segment of sort of 200-300 kilowatt charging in the next 3 years, and fleet focused vehicles as well.
Brilliant, thanks Tom. I think we've had a question through regarding general reliability of charge points, which I'm going to hand over to Mark, if that's all right with you.
Yeah, that's good. I mean, I think there's a couple in there. I think somebody's had a South Wales hazard issue. Sorry about that. I think we are being the largest operator. We work really hard on the reliability, and we have a percentage that we try and upkeep. We have an internal percentage that we try and upkeep. The one thing I will say is that being one of the oldest charging operators in the UK, is we have some legacy out there, and when we have some legacy problems. It continually gives us that process. We go through quite a renewable trend every year, so we look at outgoing charging processes or outdated charging methods that are in the infrastructure, and we look to renew and revitalise those where appropriate. And we look to invest. We've got a fair chunk of investment on existing infrastructure, so it's not just the big push for the sort of higher speed, higher network, higher infrastructure pieces. There is a large proportion of budget that goes actually to readdressing the legacy infrastructure we're building. So I think it's not a specific answer, so it's quite a specific question we've got added in, but which I can come back to on a separate note. But I think we look at very high reliability processes, a high percentage of uptime continually, and it's one of our sort of daily KPIs that we work through, and also that investment in the legacy infrastructure that we're trying to sort of build out. So I think we've got it's not just about that sort of driving forward, because we have the existing infrastructure that we're very proud of, and we want to continually invest in. I hope that answers some of that question.
Brilliant. Thank you very much, Mark. I think that's probably as well as it can be answered from there. And that was the last question. So I'm going to hand back over to Adrian. It gives us 3 minutes, so we're nicely on time there, Adrian, just to wrap up.
Brilliant. Thank you very much, Alex. And again, a huge thank you to Tom and Mark for taking us through the bulk of the presentation. But most importantly, I really would like to thank you all for joining this exclusive event. We clearly hope that you found it informative, and we're here to help. I think it is a message with our experience, both from a fuels and an electricity perspective. We're here to help you on your journey. So again, thank you very much for joining. We will share a recording of this webinar through our sales team, so please expect that. And clearly, if you have any other questions, would like to take up the offer of the feasibility study, then please contact either your BP Fleet account manager or John McPhail, as is on the slide. But thank you very much, and enjoy the rest of your day. Thank you.